You're welcome back. You're watching Business Morning, coming to you live from Channels Television, broadcasting from Lagos. I am Balaji Akinwale, and we have been talking about the inflation numbers for the month of May. And here with us in the studio are two economists from the Financial Derivatives Company Limited. We have Raphael Yemito and Damilola Akibam. Thank you for still sticking around with us. Let's get back to the issue of inflation. Right now, I'm going to start with Yemito, and I would like us to look at the inflation band of the central bank. We've seen the Apex Bank saying that it helps to keep inflation within a band of 6 and 9%. And now that we've seen inflation rise to 8%, we have just 1 more percent to go before, if at all, we hope we don't get to that figure though. What options do you think the central bank has at this point in time?
Well, pending the time for the MPC meeting in July, we believe the MPC is likely to look at its administrative tools and use administrative measures to curb inflation through the use of OMO auctions, CRR debates, and other administrative tools available to it to stem the inflationary pressures that are likely to spring up. And then at the MPC meeting, the committee would be keen on other variables like the GDP growth, which we expect to be out by tomorrow for Q1, in the inflation rates for June that will come out just days before the MPC meeting in July, and other indicators to be able to make a decision on its monetary policy tools.
Damilola, I know that if the central bank has some kind of control over monetary policies, not over fiscal policies, but how do you think it can, combine both? Why not trying to interfere, in quotes, with how government spends its money, and yet being able to maintain a stable economic trajectory in terms of growth? How do you think it can combine both?
Well, the CBN is in charge of monetary policy. Fiscal policy is the job of the Ministry of Finance. Now, the CBN, there has to be a balance between both policies for there to be a successful, or at least for you to be able to achieve whatever objectives have been laid out, whether on the fiscal side or on the monetary side. So if on one end you're targeting inflation, making use of contractionary monetary policy tools so that you can curb price stability, and on the other hand, you're seeing fiscal excesses, that undermines whatever you're trying to do on one end. So that's why there has to be a balance. So and I know on the fiscal side, the Minister of Finance, they're targeting fiscal consolidation, although in the era that we're in right now, with elections, pre-elections, and the main election occurring next year, we're going to see a lot of spending. And even the recurrent expenditure for this budget, for 2014 budget, was higher compared to last year. So we're going to see a lot of pressures from the fiscal side. But I'm sure on the monetary policy side, they would most likely stick to the current stance. And maybe we might see some further tightening along the way if for instance, we're expecting the automotive policy to occur in July. Now, if that has a significant impact, is going to affect inflation, because obviously there's going to be an increase in cost of cars, transportation costs will go up. I know that's a major aspect of the basket. So if things like that affect or make a significant impact on inflation, they might even see further tightening in monetary policy. But there has to be a balance between the two.
Now, creating the balance, it could be a challenge indeed. When we look at the fact that the central bank, while trying to maintain some kind of stability in the economy, as well as trying to ensure that businesses grow, funding is on the increase. And one of the challenges that have been raised by business owners in the country is that the central bank has continued to hold on tightly to inflation rate, or rather to interest rate. And right now, if we have increased spending by government as elections draw closer, and businesses need to, access funds at this point in time. And with interest rate rising, if the central bank or the monetary policy raises its benchmark rate again, how do you think we're going to expect the kind of funding that we need for our businesses? How should they handle all of this development before the elections?
Well, as we said in one of our publications when the CBN governor came on board and at his press conference, he mentioned that he wanted to achieve 3 things: stable inflation, low interest rates, and stable exchange rates, stable prices, stable exchange rate. And we said that is a very difficult combination, because if it can achieve that, if that is possible, then we'll see growth. We'll see increase or improved employment rate and things like that. But it's really a difficult combination to do. It's a difficult challenge for the CBN to face. And all I would say is that we would have to wait to see how the CBN handles the situation, because days after the press conference, the CBN governor, in an interview, I think with Reuters, mentioned that the CBN is not going to adjust the reducing interest rates until after the elections. So, but we probably have to wait till after the election.
Some tough decisions to be taken,
yes.
and we all have to bear with it, right?
Yeah.
Is that what you mean?
Yes.
Especially those businesses who are looking up to the banks and all the developing finance institutions in the country to help funding. And of course, the central bank governor has said that he hopes to work with these productive sectors of the economy to increase funding. So I think some kind of balancing act needs to be done. But let's get to this issue of inflation in other parts of the country, or rather in other parts of Africa. Let's look at some countries in Africa. I'll pick South Africa. South Africa has been able to do inflation targeting. It's one of the policies of the central bank in that country. But now we're just adopting it. Like just a few years ago, Nigeria is just beginning to adopt inflation targeting. How have you fared in that direction?
Oh, well, I wouldn't say we just adopted inflation targeting. It has always been there. It's just that now we have a band and say we're targeting between 6 to 9%. And you mentioned South Africa. If you look at other African countries also, in the month of May, there was a 0.1 increase in inflation figures. So both South Africa, Ghana went from 14.7 to 14.8, and South Africa from 6 to 6.1. So we can say that that trend is sort of like going round African countries. So the inflation targeting has been helpful because it keeps you focused and you know what you're working towards. And that has helped also in Nigeria. And if you look at other African countries, look at their benchmark interest rates. Ghana has the highest at 18%. And we all know what is going on. Even right now, their currencies, as I think it was Bloomberg that mentioned, it's like the worst performing currency right now. It has depreciated by about 30%. When we're in Nigeria, the Naira fine has depreciated against the dollar, but against other basket of currencies, it hasn't done too badly. So the Nigerian situation compared to his peers isn't that bad. We're actually not doing badly in Nigeria. So the inflation targeting has helped to an extent.
We may not be doing that badly, but at least our inflation rate is still a bit higher than other African countries on the continent.
Some of them, well, Ghana is 14.8, so definitely.
From what I have, it's just the only country that may have a very high interest rate. But we're still ahead of South Africa, we're ahead of Kenya, we're ahead of Ivory Coast.
Yeah, but all within the 6% and 9% band. So I think we should give ourselves some credit.
Okay, and I want to look at those, factors, because when we look at inflation figures, people wonder, what do all of this mean? Okay, in South Africa, I just want to stick to that country because I think that of recent, they've had some economic challenges in terms of the mining sector strike action. In that country, we've seen miners going on strike because they feel that they want increase in the page, in their wages and all of that. If we compare that with what's going on in Nigeria, we do not have much economic downturn or challenge as it were. But how have we been able to manage our own issues, Yemiton? How have we been able to manage our own economic activities in the country in order not to give room for deteriorating conditions?
Okay, the CBN has actually been the one, because it's is a core function of the MPC to monitor and control prices. It's a core objective of the Monetary Policy Committee. So the tight monetary policy, the tight monetary policy of the CBN has really the increase in tariff.
But we've not been able to have both. All right. I think that was where we will have to end this conversation. Thank you for coming on the program.
Thank you.
Damilola Akinbami and Raphael Yemito are both economists from the Financial Derivatives Company Limited, and they have been talking to us about the inflation numbers coming from the National Bureau of Statistics. We had that figure rise to 0.1% from 7.9% in April to 8% in May. And on this note, we end Tuesday's edition of Business Morning. Thank you for watching. We do appreciate your time with us. We hope you join us again same time tomorrow. I am Bolaji Akinwale. News Track is coming up next.